Bitcoin just got declared dead for what is probably the 10,000th time. It has lived through a shooting war in the Middle East and the wreckage across the global memory and AI trade, which is popping, and I've talked about that in the last couple of videos, and a drawdown from $126,000 all the way down to 59K. And it's currently sitting at $65,000, holding rock steady. Last week, it defended the $64,100 level, reclaimed it, and has managed to hold above it for almost a week. That is not what a market full of eager sellers looks like. That is what seller exhaustion looks like. And under the surface, the sellers are literally running out of Bitcoin to sell. Long-term holders now control 16.34 million Bitcoin. That is an all-time record. And they absorbed 371,000 coins in the last 30 days alone, meaning while the panicked sellers sold, the long-term holders bought all of it up.
While headlines remain obsessed with wars, inflation scares, and market uncertainty, Bitcoin has quietly done something that is catching investors' attention. After spending months trapped in a brutal correction that saw prices collapse from $126,000 to below $60,000, Bitcoin has suddenly surged back above $66,000, reaching its highest level in more than a month. The move comes as optimism begins to build around the long-awaited Clarity Act, with traders increasingly betting that long-awaited crypto market structure legislation could finally become reality this year. Even BlackRock's leadership has begun making surprisingly bullish comments, while President Donald Trump recently suggested Bitcoin adoption is occurring at levels most people don't yet appreciate. But price is only part of the story. Because underneath the surface, a series of macroeconomic signals are flashing in a pattern that has appeared before some of Bitcoin's biggest historical rallies. And according to one of the fastest rising analysts in the crypto space, Joe Consorti, the market may be witnessing the early stages of a setup that has repeatedly preceded major Bitcoin bull runs. More importantly, he believes the first domino has already fallen. In today's video, we're breaking down Consorti's fascinating domino sequence thesis, a chain of 4 indicators that have historically aligned before major Bitcoin explosions. We'll look at why the US business cycle may be turning higher, why copper is suddenly sending a powerful signal, why Bitcoin's unusually low volatility could actually be bullish, and the one risk that could derail everything. If Joe is right, the coming weeks could be far more important than most investors realize. So make sure to watch until the end, because his analysis connects macroeconomics, liquidity, and on-chain data into one of the clearest Bitcoin roadmaps we've seen in months. And if you enjoy these deep dives, hit the like button, subscribe to the channel, turn on post notifications, and let us know in the comments where you think Bitcoin is headed next.
So take a look at this chart right here. On the top, you could see Bitcoin. Below it is the ISM PMI, which is the single best real-time read on the US business cycle that exists. Below that is the copper to gold ratio, and at the bottom is Bitcoin's volatility. Now, watch the order of operations here. In the middle of the decade, the PMI bottoms and turns higher. Then copper breaks its downtrend against gold, and then Bitcoin volatility expands. And Bitcoin goes on the run that ends at the 2017 top. Then it happens again. PMI turns up in 2020, copper to gold ratio breaks out right behind it, and volatility expands off the floor. Bitcoin runs from 4 figures to $69,000 in tops in 2021. The same 4 dominoes, the same order. Every top on that chart and every bottom sits exactly where the sequence says it should. Now, here's why I'm showing you this today. Domino number 1 just fell. As you can see right here, the ISM PMI is sitting at 53.3, and anything above 50 means that the US economy is moved from contraction to expansion, and it just broke above the 50 level for the first time since 2022. Why does Bitcoin even care about the US business cycle at all? Well, the mechanism is simple. When the PMI crosses back above 50, it means that new orders at US companies are rising, production is rising, companies are restocking inventory. Restocking takes credit. And of course, as you guys know, credit expansion means newly printed money. And Bitcoin is the most sensitive asset to newly printed money on the planet. It doesn't follow other assets, which is obviously why Bitcoin has been doing so poorly while the stock market has done well. It follows the money. The Bitcoin 4-year cycle is a reliable indicator, and it's worked for the last decade, but partly because it overlaps with this global liquidity cycle. but the business cycle is the actual engine underneath. And that's why what I'm talking about is so important and has been the single most reliable indicator of Bitcoin starting a new bull market over the last decade and a half. And here is why it's so important for you watching at home. The price of copper relative to gold is the real economy voting with its wallet. Think about it this way. Copper represents growth, but gold represents fear. Copper obviously is an input to US manufacturing and plenty of the products and services that you use every single day, whereas gold is the hedge that people purchase during times of uncertainty. So when that ratio breaks out, when copper rises relative to gold, it means that the industrial economy is outbidding the fear. That is the regime where capital comes off of the sidelines, moves out on the risk curve, and out into assets like Bitcoin. Domino number 1 does not fall in a vacuum. The reason that the business cycle can keep expanding from here is a chain that I've been walking through on this channel for months. Inflation falls, rates fall, Bitcoin goes up. And this week, that chain got 3 separate confirmations. First, the inflation data itself. Month-over-month CPI came in at negative 0.4% against expectations of negative 0.1%. Now, the direction is unmistakable, and the panic scenario where the Fed has to hike into an economic slowdown has evaporated in real time. Another indicator of the fact that the Fed probably isn't going to raise interest rates, which will be great for Bitcoin, is Walmart, of all things. The largest retailer in America just cut prices on thousands of items, including Coke and Pepsi. Think about what that actually tells you. The entire inflation scare rested on one assumption, that companies have pricing power because consumers can absorb higher costs. Well, Walmart cutting prices says the opposite. They're already one of the most budget-friendly stores in the country, and when Walmart moves, every supplier, every grocery chain, every discounter gets dragged into the same price war. Inflation expectations continue to decline across the country. And the third piece of the puzzle is that the Fed just blinked. The moment that the inflation print hit last Tuesday, the odds of a rate hike completely evaporated. Polymarket was pricing the odds of no rate change at the July 29th Fed meeting at about 60% prior to the inflation reading, and it rose all the way up to 93% after inflation came in cool.
If Joe's domino theory is correct, then the macro backdrop may finally be shifting back in Bitcoin's favor. But even the strongest macro setup needs one more ingredient before a major rally can truly take hold. The sellers have to run out of ammunition. And that's exactly what some of the latest on-chain data appears to be showing. Over the past several months, many of the investors who bought Bitcoin near higher prices have been forced to realize significant losses, creating a wave of capitulation across the market. Yet despite that selling pressure, fresh buyers have continued stepping in around the $62,000 to $65,000 range, steadily absorbing available supply. The result is a market that appears to be building a new foundation. Now attention is turning toward the $66,000 level. A decisive break higher could strengthen the case that demand is finally overwhelming supply and that Bitcoin's recovery is becoming something much bigger.
Bitcoin just got declared dead for what is probably the 10,000th time. It has lived through a shooting war in the Middle East and the wreckage across the global memory and AI trade, which is popping, and I've talked about that in the last couple of videos, and a drawdown from $126,000 all the way down to $59K. And it's currently sitting at $65,000, holding rock steady. Last week, it defended the $64,100 level, reclaimed it, and has managed to hold above it for almost a week. That is not what a market full of eager sellers looks like. That is what seller exhaustion looks like. And under the surface, the sellers are literally running out of Bitcoin to sell. Long-term holders now control 16.34 million Bitcoin. That is an all-time record. And they absorbed 371,000 coins in the last 30 days alone, meaning while the panic sellers sold, the long-term holders bought all of it up. And the accumulation streak has now run 186 consecutive days, meaning the smart money who has been here for ages has now bought Bitcoin on net for more than half a year. Meanwhile, coin days destroyed, which is the measure of old Bitcoin actually moving, is at 313 million versus 900 million a year ago, meaning the old hands are not selling. The weak hands already did, on the way down from $126,000, all of which points to a Bitcoin cycle bottom that is well in the process of forming. Now, here's the part I really want you to internalize, because I've been talking about the bottom forming for weeks now, and this is one of the most important signals. The average cost basis of short-term holders is rising. Smart money stepped in and bought the lows, and that pulls the cost basis, so the average purchase price of recent buyers, up toward Bitcoin's price, which basically means that every dip hurts less than the one before it. Fewer people are underwater, less panic per dollar of downside. So the the market slowly stops treating dips as emergencies and starts treating them as entries. That is what a cycle bottom looks like while it's forming. Ultimately, nobody rings a bell at the bottom, particularly with Bitcoin. Bottoming is a process, and the process is visibly underway and probably very close to ending. The flows into the Bitcoin ETFs confirm this. You can see right here, the relentless outflow streak that crushed this market over the last few months is completely gone. Flows have settled into a more balanced regime, and the inflow streaks are starting to reappear. So the structural buyer of Bitcoin is back at the table. Now, stack domino number 3 on top of all of it. Bitcoin's implied volatility is at 36.5%. And as you can see right here, the 90-day realized volatility of Bitcoin is at the same level that it hit at the last cycle bottom. And this is why that's so important. Volatility this low does not mean there is calm in the market. It means there is a loaded sprint. And the sequence tells you what happens next. Volatility doesn't live at the 3rd percentile forever. It expands. The only question is what direction it goes. And direction has historically followed the business cycle, and the business cycle just turned up. Now, I know exactly what some of you are thinking because I'm thinking about it too. What about the war? I'm not going to wave this one away because it is the one thing on the board that genuinely breaks this entire bullish setup. Iran has declared the Strait of Hormuz closed until further notice, yet again. And the tape backs it up. As you can see on this chart right here, only 11 commercial crossings have occurred in the last 24 hours. That's compared to 57 at the June rebound high, nearly 10% of the normal run rate. And as a result, oil has spiked massively higher. You can see right here, it's now at $82, up 10% just this week. And here is the chain that matters. If oil keeps rising, inflation ticks back up. And if inflation ticks back up, rate hikes come back on the table. And if hikes come back on the table, every macro tailwind that I just described disappears in an instant, and we probably get one more massive leg down for Bitcoin. That's the honest risk. So watch the price of oil, not the headlines, because that is going to give you the biggest indication about what happens to Bitcoin next.
What makes Joe Consorti's analysis so compelling is that it doesn't rely on hype, predictions, or wishful thinking. Instead, it focuses on a sequence of measurable signals that have repeatedly appeared before some of Bitcoin's most significant moves. The business cycle is improving, the copper-to-gold ratio is breaking higher, volatility remains compressed, and long-term holders continue accumulating Bitcoin at record levels while weaker hands exit the market. Taken individually, each of these developments is interesting, but together, they create a picture that deserves attention. The same sequence that helped identify major turning points in previous cycles may once again be unfolding right in front of us. If that's the case, then the market may still be much earlier in this recovery than most people currently believe. At the same time, Joe is careful not to ignore the risks. Rising oil prices remain the biggest threat to this bullish setup. If energy costs continue climbing and inflation reaccelerates, expectations for easier monetary policy could disappear quickly. That would weaken liquidity conditions and potentially delay Bitcoin's next major advance. In other words, the opportunity is real, but so is the risk. For now, Bitcoin appears to be passing an important test. Despite months of fear, massive volatility, geopolitical tensions, and repeated declarations that the asset is finished, it continues to recover, hold critical support levels, and attract long-term buyers. Whether this proves to be the foundation of the next major leg higher remains to be seen, but the signals Joe highlighted are certainly worth watching closely. If you enjoyed this breakdown, don't forget to smash the like button, subscribe to the channel, and turn on post notifications so you never miss our latest Bitcoin and crypto analysis. Also share this video with anyone following the markets, and let us know your thoughts in the comments below. Has Bitcoin already found its bottom, or do you think one final shakeout is still ahead? As always, thank you for watching, and we'll see you in the next video.